The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, I'm Dwayne, founder of...
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. And today is Tuesday, 6th day of October, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Still working on that YouTube issue. Had some reports that it's up and streaming today, right now, but I haven't been able to check it myself. So all we can do is hope for the best. Keep working on it until it's fixed. But thanks for joining us. If you can't see the screen I have up, go to our homepage, CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, That will give you one-click access to the show each and every day. Now, on the days you're out of the office, away from the desktop, not to worry, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just don't have access to the chat box. When you log in using the link from the home page, you always have access to the chat box so you can ask questions, participate in the discussion. So that's the preferred method. We also stream when things are working well on Facebook, YouTube, and Twitter. So, with all that said, let's just open with a word of prayer. Heavenly Father, we come to you today asking for your guidance, your wisdom, and support as we begin today's broadcast. Help us to engage in meaningful discussion, allow us to grow closer as a group, nurture the bonds of our community, fill us with your grace, and continue to remind us all that what we do here today, all that we accomplish, is for the pursuit of truth and for the greater glory of you and for the service of humanity. We ask these things in your name, Jesus. Amen. Amen. Well, happy Tuesday. Okay, let me give you the numbers from around the world. These are cash markets, the indices as they're called. Let me just refresh here and get some fresh data. And on top of that, my little TV monitor, the video went out on that yesterday. The one where I have in the background, over in the corner, streaming CNBC, makes it look, kind of officious. Yep. The audio's still fine, but the video just went bye-bye. All right, cash markets. The Dow currently up 11 points. NASDAQ down 51. S&P 500 down 5. And the Russell 2000 up 17. In the commodity basket, crude oil up $1.31, trading 40.53 last. That's a gain of almost 3.5%. Gold down $9.40, trading 19.1070 last. Silver trading 24.06 last. That's a drop of about 2%. In the Asian markets at the close, Nikkei posted a gain of 121 points. Shanghai dropped 6. The Hang Seng gained 212. And in the European markets at the close, FTSE picked up 7. The DAX gained 77. And the CAC added 23. So no movers, no shakers around the globe. It's a mixed day in Asia, green day in the UK, and it's a mixed day so far here in the US of A. Now, if Michael's ready, we'll go to him for a recap of everything that happened this morning in the live training room. You are? Okie doke.
I am. I am ready to go.
He is ready to rock.
Ready. I am.
There we go.
And we had another fantastic day.
Awesome. Good news. All right, well, I'll hit mute on my end and let you get at it.
Okay, thank you. Hang on, let me take a drink before I start talking. All right, I think we're going to go now. Good afternoon, everyone. Today is Tuesday, the 6th day of October, 2020. Today we made, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. I have to say that. Today we made 18 ticks on the euro, 7 ticks on crude, 42 ticks on gold, and 8 ticks on the ES. That put us at plus 712.5 on the morning session. We did do a couple of YBR trades. We stopped out on one, and then we got it all back, plus 10 bucks on another one. There were a lot of YBR trades that we didn't do that were good, really nice trades, and I'll get into that in just a minute. But today it took 24 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 18 trades this morning. Okay, so on the month now, we're only 4 days into the month.
The place to be is www.
That's over 4 days, averaging $671 per contract per 2-hour day. And we are now at day number 160 of consecutive days of getting the goal. On the year, we're at $78,144. That's over 185 days, averaging $422 per contract per trading day. Now, I want to get this over 100 grand by the end of the year. So it'd be 1 contract, 2 hours a day, over 100 grand, and I miss most of the trades. Just to give you guys an idea of how unprecedented these times are. And I will get it over 100. All right, if you have not joined the CFRN family yet and you want to, all you have to do is go to EminiFuturesTrading.com, EminiFuturesTrading.com, and just follow the instructions. They're simple, and we've made it easy and affordable for you. Given these crazy times that we're dealing with, we'll do our part. All right, so here we go. We started out here. This is gold. We're going to start out with gold. All right. We started out a little bit choppy here. Today really didn't have any trade setups. Okay. Down here, we had to break this dynamic support. We finally did. We had a short right there that I didn't do. A short right here that I missed. A long right there that I missed. And then we picked up, on this first trade, we picked up 1 tick right there. On the second trade, we picked up 14 ticks to put us at plus 15. Here we picked up 5 more to put us at plus 20. I missed a trade right there. That was a nice trade right there. Here we picked up 10 more to put us at plus 30. I think we grabbed something in here and I just didn't mark it. There we picked up 6 more to put us at plus 36. 1 here to put us at plus 37. A break even there. And right there was getting toward the end of the session. We picked up 5 more to put us at plus 42 on gold. There was another short right there that I missed. And then you get into the break. During the break, there was a short there. A short there. A short. Nope, that wasn't one. Sorry. And that was pretty much it during the break. There was a long right here for about 6 ticks. Okay. Now you may laugh or you may think it's insignificant when I say, I picked up 1 tick here. That's because I locked in plus 1 tick and I was letting the trade run and it came back and took me out at plus 1 tick. Now I'd rather take off 10 or 15 at a time, but it depends on the markets and what they're doing. Now the euro, our first trade on the euro was right here. We picked up 16 ticks on that one, then 2 more on this one. Oops. Well, I didn't account for this. It looks like we picked up a little bit more there, but we picked up 2 more on this one, and I think we picked up a little bit of something on that one that I didn't account for. Let me go see. Yeah, we did. And during the break, there was a bounce off the BBC there. It needed to put in a lower swing. It finally did right here. Then it gave a trend line trade right there, and another trend line trade right there. That was during the break. Now, crude oil. It started out really choppy in here on crude. All right, and so I didn't really want to do anything until it showed some direction. And finally right here it did. And then we took a trade right here. We got 2 ticks on that one. We got 5 ticks on that one. and break even there and break even there. That was our morning session with Crude. Let's see, during the break, yeah, there was a long trade right here during the break, and a momentum short there and there and there during the break. Okay, now the ES, we had just a few trades on the ES because, I mean, look at this huge move down right here. Now, somebody was talking when that happened. I think Powell was talking when that happened. I'll go and look at that in a minute with you. Okay, but here on the ES, our first trade was a break even. Our second trade was a break even. Our third trade was +8, and our fourth trade was a break even. Then it started just getting wacky in here, and I will go and find out why. And that was all the trading we did on the ES this morning. Let's see, was there any way that we could have gone into that? Inverted 137 is the only thing, but even that we wouldn't have done until we got down here. Yeah, and that was it on the ES. So on the morning session, again, if you can read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 6th day of October, 2020. We made 18 ticks in the euro, 7 ticks in crude, 42 ticks in gold, and 8 ticks on the ES. $10 on the YBR trade. We're plus 712.5 this morning, and took 24 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 18 trades. So on the month now, we're up $2,687. That's over 4 trading days, averaging $671 per contract per 2-hour trading day. And I'm still missing most of the trades. Now, we're on a 160th consecutive day of getting the goal. And today, we're at $78,144 on the year. That's over 185 trading days, averaging $422 per contract per trading day. Again, I'm telling you, if you're not doing this, I don't know why. I mean, you don't even have to be using our stuff. You could be using something else. But if you want to become part of the CFRN family and learn how to do this, go to EminiFuturesTrading.com. EminiFuturesTrading.com. And you can sign up there. And, you know, we've made it easy and affordable for you. And that's all you have to do. Okay? So with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Excellent.
I am ready. Now, it looks to me from my end like we are streaming live on YouTube, but I can't swear to it. So, why don't you point your browser, Michael, to
YouTube? Okay.
.com/CFRN and see what you see.
I see us live on YouTube.
Do you?
Yes.
Okay.
And let's see what I see.
And I wish I could.
This is what I see. Live now, right here.
Yeah. So, wish I could tell you, and in just a minute it'll go to my screen. I'm assuming. But, yeah, I'm just trying to figure out why one day and not the next. But I'll continue to work at it and figure it out.
Do not know.
I think it's all I think all the parts are operating. Somehow one of the connections, this thing feeds the other thing, and that feeds the other thing, and then pretty soon, somewhere along the way, there's a hiccup, but I managed to unhiccup it this morning, which is a good thing for today, but doesn't give me peace of mind for tomorrow. So anyway, recap of the recap.
Today it took 24 minutes and 3 trades to get to $100 per contract.
That's a good job.
Thank you.
How many days?
What's that? How many days? 160. 160
Wow.
now.
That is pretty incredible.
It is. I'm telling you, unprecedented times. We're up over $700 a contract again today. And well, that's me missing a bunch of the trades.
Absolutely. Unprecedented. Okay, this week, Logic 247. Okay, it's been a slow week with the logic alerts. Now, the logic alerts are the ones that come around the clock 24/7 in the channel in the Logic 247 private members only channel. And so far this week, it's already Tuesday, we've only had a total of 12 alerts issued. 3 never triggered. Left us with 9 actionable alerts. One of those got stopped out, so 1% of actionable alerts were stopped out. So that's obviously a good thing. Our typical number down here is 20%. The problem is we got to find more alerts to send to you, which I will continue working furiously on that as I do. Now, just to give you a quick scroll through of what the week looks like before I give you the Concierge Trade Alerts. See, the logic alerts are based on current price action around the clock as opportunity presents. Now, last week, which was week 113, we had a total of 54 alerts. 6 never triggered. That left us with 43 actionable. 2 of those guys stopped out, so 5% of actionable alerts were stopped out. Again, that's a lower than normal number. The average is 20%. But coming into the week, there was a long on the Dow. There was a no trigger on crude. There was a carryover on the Russell that was to be long. It was worth $135 per contract traded. Then we had a gold, which was worth $980 per contract traded. And we had a max stop out, $300, long on the S&P. And then here we had a short on the NQ, no trigger on silver. This was a long on crude oil. This was a long on the Dow, no trigger on the NQ. This was a long on the Russell. That one was worth $505 per contract traded. And then a long on the S&P, which was good for $137.50 per contract traded. Now, those are the ones that flow into the channel round the clock as opportunity presents itself. Now I'm going to give you the Concierge Trade Alerts from last night, and you can actually grab a screenshot of these if you would like to. Okay, last night didn't get them out to 8:40 p.m. Eastern. I tried to get them out a little closer to the Globex Open, but I running late last night. Now, the way you read this, you want to consider being long 3403 on the S&P or short 3374, whichever presents first. And often there will be days where we have two-sided action, where you'll not only have an opportunity to go long, but to also go short. So when this report comes out at the beginning of the session, these numbers are good for the entire session, and they may trigger multiple times. Often we see them trigger 2, 3, 4, 5 times in just one session. So to the markets that you trade, go to those charts and put a line in the sand on the long side, a line in the sand on the short side, and then everything that happens in between these two numbers is really the market just trying to make up its mind which direction it's going to head for the session. If it's going to head in a particular direction, once price reaches, in this example, 3403, we only want to be looking at long opportunities. And if price reaches 3374, then we only want to be looking at being short at 3374 and or shorting opportunities below 33.74. Okay. And while it was in my heart, it was not in my words. I did include John in our opening prayer, and I ask you guys to do the same. Haven't spoken with him today, and for John to not even pick up the phone, either he's A, incredibly busy, or B, he just isn't feeling well. And I got a feeling he's still under the weather, so let's hope and pray that, let's believe that he's going to have a miraculous recovery, along with the president and along with the first lady. A lot of mixed reports out there. The president's really sicker than everybody's letting on. Others say no, he's in tip-top shape. Welcome to Capitol Hill, where you get to choose whatever you believe to be truth for the day. Okay, so now with that said, let's go to a daily chart of the S&P 500 Emini Futures. Yesterday, we drew some fibs on here. Now, if we went to a daily chart of the S&P cash, you'd see gaps. On almost every day, there'd be, gap higher, gap lower. When the index closes at 4 p.m. Eastern, when they stop printing numbers at 4 p.m. Eastern, then Globex kicks in. Traders around the world are still buying and selling stocks, which is what leads the index, but the index itself is closed. So whatever happens with all that stock trading overnight around the world, at 9:30 a.m. Eastern, when the Wall Street markets open, that's where those gaps come in on the cash index. So don't want to confuse you, but just want you to understand why, if you look at a cash index chart, there's all these gaps, but when you look at a futures daily chart, you don't see too many gaps. Sometimes on a Sunday night, and that's about it. So here's what we're looking at. This is the new all-time historic high, 35.76 and a quarter. It's a new all-time historic high by a tick. We talked yesterday about this little area, which would give us room to get up to this swing high, which is really the last line of resistance that we face before we trade into this window of opportunity, which takes us up to this swing high. Okay, if we can get past that swing high, because you got to remember, on this candle, this was green candle. At one point in the life of this candle, it was green. It looked like we were going back to challenge the all-time historic high. The seller shut it down, sent price in the other direction. What was once a green candle became nothing but a wick, followed by a red candle, but we closed that day well off the lows. We closed right at the BBC. Now, BBC just stands for bull, bear, cross. When price is above the BBC, we're bullish, we anticipate higher prices. And when price is below the BBC, we're bearish and we anticipate lower prices. So once we have this bearish cross, that's sort of our confirmation that we're heading for lower prices. So we had a leg and a retracement and a leg and a retracement. And when this is unusual to see on a daily chart, but we got briefly above the BBC on the daily, and then we were right back below it. Okay, we traded to the short side. Now price has wound its way back on top. So this is going to be a really critical area right here. The swing high of this candle, 34.19 and a half. Okay, if price can get above 34.19 and a half. Hold it on a pullback. In fact, let's give it some room. Let's call it 34.25. If we can get above 34.25 and hold that on a pullback, then that is going to send the market up to test this swing high. If we can get through that area, then it will send us on up to test this all-time historic swing high. Now, looking at just this last leg up, which began on June 30th, if we draw ordinary fibs from the low to the high, price has already come down and hit the 62% fib. We talked about if the 62% fib was broken, then our window of opportunity to trade to the short side would be right here, and then we would expect good support where we had the bullish cross. But price could not overcome the 62% fib. Buyers came in, they supported price all the way back to the BBC. They waged the battle 1, 2, 3, 4, 5, 6, 7 sessions. And clearly this is a day where we may have opened, we obviously opened above the BBC, and we may very well close above the BBC. If that happens, in this area of opportunity here, in fact, consider getting back above that 24% fib at about 34.45 to 34.74. I call it 34.75. Make it 45 to 75. That's a nice 30-point window of opportunity where we could run into some resistance in this area. If we get above that, then we have nothing in the way that prevents us, no obvious obstacles that prevent us from going up and attempting to break out above the all-time historic high. Now, anything can bring volatility to the markets. Obviously, this pandemic has brought much volatility to the markets, and almost on any given day over the past few years, whether it was Russia collusion or, boy, you name it, there's been something going on that has spelled volatility. The closer we get to the election and the outcome of this election, no matter which party is claimed victor, nobody knows what's going to happen next. In fact, I don't think anyone really knows how the people who are supposed to handle that kind of thing, I don't think they know how they're going to handle it. Are they going to count the mail-ins, not count the mail-ins? Well, what if a person voted and mailed one in, and they actually found one, an extra one just laying on the ground there by their mailbox in their little planned neighborhood? So now they got 3. They went and voted, they mailed one in, and they found one. And so they dropped that into a mailbox. I mean, I don't think anybody knows what the right answer is. The nation has certainly never faced such an issue or crisis as this. How do we come out of it? I don't know. I watched a thing last night that showed how Sweden has handled this whole pandemic. And the way they handled it was they just kind of pretty much did nothing. They recommended that people practice social distancing. They did not force people to wear masks. I don't think they closed any of the schools. I don't think any of the businesses were forced to close down. And here's an interesting statistic I didn't know, along with a lot of other things I don't know. Did you know that in Sweden, 50% of the people live alone? Yeah. Most everyone I know, in fact, I could probably say, I would have to think, but maybe I know 10 people. Of all the people that I know, I might know 10 people who live alone. That speaks to a big difference between the culture, or society. Now, what does that have to do with the coronavirus? Maybe it has nothing to do with it. I just found it interesting because as a people, the way we were created as a tribal group, I think we were born to, live together. So it really stood out to me that everybody's living alone. And also one of our members' wives, Anna, we want to lift her up in prayer. She's one of our newest oncoming partners, but she has tested positive for the COVID. So we're going to stand in faith and believe God for an immediate and rapid recovery. And we'll remember that each and every time that we do pray. Okay, so you got your screenshot of the Concierge Trade Alerts. Won't take long. We'll just cruise right through these. So let's go to a 30-minute chart of the S&P. Chart. Okay. That is a current weekly trading zone, 83/84. The next current weekly trading zone is overhead at 3418/19. So we consolidated at the zone. We made a beeline for the zone overhead. Price is always trying to get to a zone, either the zone overhead or the zone below. And you can always tell which one it's trying to get to based on its relationship with the BBC. As long as we stay above the BBC, we can see that price is trying to get to that zone overhead. But once price drops below the BBC, we can clearly see that price is now trying to get to the zone below. So just as we consolidated, for many hours here, price came back. Okay, once this resistance was established, price just could not break through. It came back, it consolidated. We took off, we got above the BBC. We made a run up and put in a swing high at 3405.75. We pulled back to the BBC. When price can go no higher, that's resistance, and resistance will cause the market to go and look for support. And when the market finds support, which means it can't go any lower, that will send the market looking for resistance. And so that's how markets work. That's the truth about trading. Price. Doesn't matter how many indicators or oscillators or any other things you put at a chart or throw at a chart, the price is going to trade from willing buyers to willing sellers, from sellers back to the buyers, buyers back to the sellers. No man, no machine, no algorithm is going to outfox that, change that. That's just how it works. Okay? So we found support here. Got above the BBC. Off we go to the zone overhead. We run into resistance. So resistance sends us back to support at the BBC, which we find. Okay. Now we're building a green candle, but there is an obstacle in our path. It's called red and falling. This indicator, the official term, is CFMA1. I just call it blue and climbing, red and falling. When it's blue and climbing, that supports higher prices. And when it's red and falling, that supports lower prices. And when you have price above the BBC, heading into red and falling, that's potentially where the market is going to find its next swing high, just like here. Okay, now when this candle opened, it was green. It gave the impression that we had overcome the power of red and falling. But by the time that 30-minute candle finished, the green candle vanished, leaving a wick in its wake. And here we came with a red candle that actually closed back below the BBC. That is a very difficult market to trade. Okay? Now, the Concierge Trade Alert last night for the S&P was to be long 3403. And that was over here. $34.03. Swing high right here was $34.03 on the nose. Okay. Swing high was $34.0575. So that's 2 3/4 points. That's what the market made available. The short side for the ES was $33.74. That has not been tested as of yet in this session. Okay, 33.74. But if the market comes undone, it's below this weekly zone. You want to keep an eye on that. Now the next weekly zone below us, below 33.83, is down at 33.40/41. So if market were to trade to the south side, trigger on the short side, the support you'll be looking for on the way to the zone, the obvious obstacle would be right here where this bullish cross took place at 33.58. Okay? All right. So there's your S&P. Now let's find the Dow. Is that it? That is it. Okay, here's the Dow. Now let's see if these zones are updated correctly for this week. This zone should be at 28095. Above that, 29055. Let's just get rid of this, and we'll drag this one. Get rid of that and drag this one down to 29055. All right, so we got 29055. We're sitting right at a weekly zone right now. 28095/28100. Below that is 27860. /65. Okay, so we've gone from zone to zone. Price always trying to get to a zone, either zone overhead or the zone below. So from here, it did make it to the zone overhead, might have missed it by just a tick. And then on the pullback, we overshot the BBC by just a little bit. And then we completed the journey and then some, taking us up to the zone at 28095/28100. Okay. The alert last night for the Dow was to be long 28090. 28090. Which is unusual because I typically won't place an alert within 20 points of a weekly zone. So I fear I may have been looking at last night's number when I triggered that one, but hopefully you were looking at your zones and you got it right. Short side for the Dow, 28,100. I'm sorry. The long side was 28090. That one was in the wrong place. The short side was 27845. Which is down here. Two, 7, 8, 4, 5. I gotta get these zones updated. So those are the numbers for the Dow. All right, let's find the Russell. On the Russell. Now, 1604 is a last week zone. So 1620. The next zone overhead for this week is going to be 1655. Come on. $16.55. Now below that, it could be $15.73. $15.73/74. Okay. Now the alert last night for the Russell was to consider being long, 1583, which is right here. This is an example of things working out the way you anticipate. So consider being long, 1583. Okay. All right, from 1583. We put in a swing high at 1595. So that's a 12-point move at $50 a point. That's $600 per contract traded. Now we know that important prices, important areas are almost always tested. The swing low here was 1582.70. So we actually got 3 ticks back below the trigger. And on this trigger, we've got a swing high at 1602. So from 83, it'd be 17. That's about 19 S&P points so far. $950 per contract traded, but no exit signal as of yet. Now the exit signal will look like this. The step line will hook right, and then we'll have a red candle close below the step line. Okay? That will be the market saying this move has run out of steam. Now, you can also simply make a decision. You know, I entered at 1583. I've had no exit signal. I'm at 1603. I think I'll take my $950 per contract traded times, however, whatever number of contracts that you have earned the right to trade, and now I'll go fishing. Okay, nothing at all wrong with that. Or you can stay with it and see what the rest of the day brings. keeping in mind we've got a good distance to go to the next zone overhead, way up at 1655. Okay. Zone below is 73.74. Now that zone up at 1655/66, that is the highest weekly trading zone for this week. Okay. All right. So that covers Russell. Let's go to the NQ. NQ, pretty flat. That's what a flat market looks like. On the NQ, the alert was to be long 11.513. Which we did not reach in last night's session. The short side was 11.351. Which we also did not reach in last night's session. That's just how flat it was. Now our indicators do a couple things. One, they show you the high probability, low opportunity entries into the market. But when these two indicators are just hugging each other, horizontal like, there is no trade setup because there is no trend. So that's just a real fast way to know if any given market has a trend going on. Open a 30-minute chart, look at these two indicators, and when they're, see over here, we got a leg and a retracement, then a leg and a retracement, and then like somebody just let the air out of the tires. Now, are we starting to see something here? Possibly. The best thing we could see here would be for this to fail, because we actually have a pretty decent leg here. So if we could get this leg retracement and then a continuation of the leg, that would be nice. That might be the potential of the NQ, for the NQ to wake up and get a move on. All right, let's look at crude. Let's see, got the right crude. Let's try again. Yeah, that's the right one. Okay, but the zone's off. Okay. All right, let's try that again. Okay, I just haven't reset the zones. All right, GCLX 20. We did hit last week's zone at 40.65, but that's not this week's zone. Now today's just Tuesday, so that's another good reason why it's a good idea to keep last week's zones handy, because there's a really good chance they may come into play again this week. Okay, so the highest zone we have up in this area, there's a zone way up at 43, way up there. So we're just gonna clear all this stuff out for last week. There's a zone way up at 43.35/40, but we won't worry ourselves with that. For now, what we want to look at is the nearest zone, which is 39.35. /39.40. So we got lots of room to climb overhead. And this pullback to the BBC could be the very thing that leads us up into that area. All right, so we consolidated for a number of hours here at the weekly zone, and that's what we anticipate. Only three things happen at a weekly trading zone. The most likely thing is consolidation, which is what you see here. Second most likely is rejection. The third and least likely is what we call the slice. Okay, I don't have a real good example of either one of those here, but as I see one on a chart, I'll point it out to you. Now, the Concierge Trade Alert last night for crude was to be long, 39.85. Obviously, we wanted to be above this swing high. We needed to make sure price was serious about taking us up at least in the direction of that next weekly trading zone. Okay. And so the number again for crude was to be long 39.85. And we made it up to a swing high of 40.83. Now, if we had gone 2 ticks higher to 40.85, that would be a $1,000 per contract move. We didn't. We came 2 ticks shy of a $1,000 per contract move. Now, the step line, as you can see, it's crossing from the left side of the BBC to the right side. Here is the first closing price, the first candle that closes below the step line, and that number is 40.52. So if you take 40.52 minus 40.52 minus 39.85. That's $670 per contract traded. From here to here. Yet the exit signal is never going to get you out at the swing high or the swing low. It's just not possible because no one, not man nor machine, knows that a swing high is going to be a swing high until after the fact. Same is true of a swing low. Now, based on our methodology, based on our strategy, what we would anticipate here is that price will find support on this pullback at the BBC. Price always reverts to the mean. In our case, the mean is green. Sometimes price won't make it all the way back to the BBC because there's bullish momentum in the market. So we dipped and then we closed back above blue and climbing, which sent us right up into the zone where we had many hours of consolidation before price broke free from that magnetic attraction of the zone and handed out almost $1,000 per contract. Okay, so that's the story for crude. Next, we go to gold, and 1924/25 is a last week zone. So 35. Sorry, 37.38. That's a this week weekly trading zone. And below that is 1918/19. And again, take a look here. See how flat this gets? We have a bullish cross. We have a nice move up. We have the beginnings of what could become a very nice move down, right? price trades below this area of consolidation. You've got red and falling. You've got a bearish cross. All we need to complete this picture would be a pullback to the BBC and then a continuation to the downside. Now the actual alert for crude was to be long 1922, and that happened right here. 1922, and we put it a swing high at 25.80. So almost, well, we'll call it 3 points. $300 per contract traded. Important prices, important areas, almost always tested. So we get back below the trigger. We get below blue and climbing. We find support at the weekly zone. We catch a bounce. And we get a swing high there of 1927. So that's a 5-point move. Crude pays $100 per contract traded. So that's a $500 per contract move. And then last, on silver, we had an alert to be short 24.21. And that happened right here. Now, from 24.21, we made a drop down to 24.14. It's about $350 per contract traded. We got back above the trigger, and we dropped all the way down to 23.85. So that's it's about 35, it's about $1,700 per contract traded. A $1 move in silver pays $1,000 per contract traded. Now I might add, in this particular move, silver got red and falling, okay, and since this trigger, we don't have an exit signal, but we have ran into what should potentially be good support. Okay. Now, there's no reason, well, certainly you can exit a trade anytime you like, but based upon the reading of the chart, as long as you've got red and falling and you're printing a red candle, the market is looking for support. Will it find it here? That's a high probability. If it does, then that's a great spot to take profit. Not that you couldn't take your profit here, because you certainly can. But once price does find support, then what will happen is price will start to walk sideways. This step line, which is on the left side of red and falling, it will cross over to the right side of red and falling. And then, because it's a short, the first green candle that closes above the step line, that closing price of that candle, that becomes the exit signal. All right. And that, my friends, brings us to our good word for the day. Yesterday, we talked about, should you invest? It's just a question. Solomon had a lot to say about that. Today we'll talk about the transforming power of gratitude. Gratitude is one of the most powerful forces in the universe. Giving thanks infuses joy and resilience into your daily life. 1 Thessalonians 5:18 says, "In everything give thanks, for this is the will of God." John Henry Jowett said, "Every virtue divorced from thankfulness is maimed and limps along the spiritual road." Without gratitude, your faith becomes a hollow religious practice, and your love for others crashes and burns, leaving you filled, drained of joy, and acting like a martyr. When Paul says, "In everything give thanks, for this is the will of God," he's not saying every circumstance you encounter is necessarily God's will. We got to be real careful on that one. He's saying that thanksgiving is God's will. Bill Salyer observes that you'll see in the fine print of many insurance policies a let-out clause about an act of God. Have you ever read that fine print on one of your insurance policies? Man, we cover everything except an act of God. I think some policies even say riots and acts of God. That's their escape clause, because they're saying, wait, we have no control over that. It is, as it says, an act of God. Now, the Bible affirms that God is sovereign over all creation. He says and points out that it's a very hard truth for us, but many disasters are wake-up calls to a world that thinks it's in control. God is reminding us, no. You're not in control. And when we realize that, then we may actually come to look to and depend on the one who is in control. In fact, we begin to realize that in and through even the worst of circumstances, God is working out his plan of redemption. Despite the disasters humanity causes by going our own way, God is still able to make all things work together for good for those who love him and are called according to his purpose. You can read that in Romans 8:28. And we should give thanks for that. Here's the bottom line. In any given set of circumstances, you can choose to whine or you can choose to worship. And you can't worship without giving thanks. So today, let us be thankful. Let us possess that powerful attitude of gratitude, more powerful than any other force. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.